When a new crypto launches by airdropping its coin or token, the result is often a sharp decline in price. Celestia is one of the few in this category that has managed to go the other way, up. That's because Celestia is the first modular blockchain. It's a new type of crypto that could change how the whole crypto ecosystem is structured and challenge so-called monolithic blockchains in the process. That's why today we're going to tell you everything you need to know about Celestia, including where it came from, how it works, and how much potential its TIA coin could have. This is one you don't want to miss. I will of course start by saying that nothing in this video is financial advice. It's educational content that's meant to inform you on your crypto quest. And I'll also note that this video is not sponsored by Celestia, and all the information in it is based on publicly available information that anyone can verify. Moreover, nobody at the Coin Bureau currently holds TIA as part of their personal crypto portfolio. If you want to see the full list of the cryptos we hold, as well as which ones we're watching, then join the Coin Bureau Club using the link in the description. Spoiler, it's got a lot more than our crypto portfolios there. That said, the history of Celestia begins with Mustafa Al-Bassam. Now, Mustafa is famous, or infamous, for being one of the co-founders of Lulsec, a hacker group which hacked multiple high-profile organizations, including the CIA. Mustafa also worked with the Anonymous hacker group, where he uncovered a crazy conspiracy. You'll have to look that one up on your own time, though. Now, of course, Mustafa was eventually caught, but he never faced prison time due to his age. He was 16 at the time. Instead, he was banned from using the internet for 2 years. I would love to know how he filled his days without it. Or maybe I wouldn't. Anyway, after that, Mustafa went to study computer science at King's College in London and then did a PhD at University College London. Given Mustafa's background, it should come as no surprise that he's been aware of Bitcoin since 2010. During the first crypto bull market in 2013, Mustafa noticed that Bitcoin's 1 megabyte block limit had been hit for the first time. This got him interested in crypto scalability, aka increasing transaction speeds. Now, the kind of scaling that Mustafa was interested in was sharding, breaking up the blockchain into multiple parts so that transactions can be processed in parallel. In 2017, he published a paper about a sharding method called Chainspace and founded a startup around it that was acquired by Facebook in 2019. By that point, Mustafa had become heavily involved in the Ethereum ecosystem, so much so that he had co-authored a paper with Ethereum creator Vitalik Buterin in 2018. In 2019, Mustafa published a paper about a new crypto scaling technology called Lazy Ledger and posted it to Ethereum's research page. He subsequently decided to create a team to build a crypto project based on his new paper and onboarded Ismail Khoffi and John Adler as co-founders. For context, Ismail used to be one of the core developers of the Cosmos blockchain, and John invented the optimistic rollup Layer 2 technology. Quite the team sheet. Realizing that Lazy Ledger may not be the best name for the project, the early team rebranded to Celestia in 2021, which means heavenly or sky, and fits hand in glove with the Cosmos ecosystem's universe vibe. Now, this is interesting given that Celestia is simultaneously rooted in the Ethereum ecosystem. What's even more interesting is that the entity that built Celestia is referred to as Celestia Labs, but is apparently incorporated as Strange Loop Labs in Liechtenstein. Similarly, the Celestia Foundation, which oversees Celestia's ongoing development, is likewise based in Liechtenstein, but under its real name. In any case, in March 2021, Celestia raised $1.5 million from various investors, including Cosmos's Interchain Foundation and Binance Labs. In October 2022, Celestia raised an additional $55 million from various crypto VCs. I'll quickly note that Crunchbase notes that there have been additional funding rounds. In September last year, Celestia announced that it would be conducting an airdrop for early users of Ethereum's Layer 2s, as well as stakers on Cosmos and Osmosis. Celestia's mainnet went live 1 month later, specifically on the 31st of October, the same day that the Bitcoin white paper was published 15 years previously. And by the way, if you're enjoying the video so far, be sure to pat that like button like you would the head of a much-loved pet in order to give it a boost. Now, Celestia describes itself as, quote, a modular data availability network. Obviously, that doesn't mean much if you don't know what any of those words refer to. So, let's start with that first term, modular. Now, modular is a term that was apparently coined by Mustafa, and it has to do with crypto architecture. Basically, almost every cryptocurrency blockchain consists of 2 layers, the execution layer and the consensus layer. The execution layer is the one that processes transactions, whereas the consensus layer verifies that these transactions were processed properly, i.e., that they're valid. Mustafa considers cryptocurrencies with this architecture to be monolithic because both processes are taking place on the same blockchain. This limits how fast a monolithic cryptocurrency can be, particularly when you're dealing with general-purpose cryptos with multiple dApps sharing the same blockchain. Celestia's core innovation is that it only has one layer, the consensus layer. This makes Celestia a modular blockchain, and you'll recall that it's the first of its kind. This is significant because execution-focused chains, such as Layer 2s, can leverage Celestia for consensus to increase speed and lower costs. But this isn't the only thing that makes Celestia different from other blockchains. Recall that second term, data availability. Basically, almost every cryptocurrency blockchain contains a historical record of all past transactions. Each block contains a batch of these transaction records and is linked to the next block, hence the term blockchain. Nodes will check these records to ensure that current transactions are valid. This also limits how fast a cryptocurrency can be, because nodes must always check the entire history from past to present. Now, in theory, Celestia's storage of data from its execution layers means that it has the same bottleneck. In practice, however, Celestia solves this scalability bottleneck by introducing something called data availability sampling. This involves checking a few random small parts of each block to confirm the blocks are valid. Besides the fact that this further lowers costs and increases speed, it's significant for 2 reasons. First, checking just a few random small parts of each block can offer validity guarantees that are on a par with checking the whole block. Second, and more importantly, this makes it very easy for anyone to run a node to improve Celestia's security and decentralization. This isn't the case for most monolithic chains. And, as a cherry on top, Celestia leverages another technology called namespaced Merkle trees. The tech behind these is outside the scope of this video, but the simple explanation is that it allows execution layers to only check the data in each Celestia block that relates to them. This further reduces costs and increases speed. Now, the caveat to all this is that Celestia itself seems to be quite centralized under the hood. For reference, there are 5 types of nodes on the Celestia blockchain. Validator nodes, which produce blocks, full storage nodes, which store the full blockchain history, full consensus nodes, which synchronize the blockchain history, light nodes, which do data availability sampling, and bridge nodes, which effectively allow light nodes and validator nodes to communicate. Now, according to MintScan, Celestia only has 100 validator nodes, which makes sense given that it's a Cosmos-based blockchain and Cosmos-based blockchains are typically limited to around 100 validators. The thing is that we couldn't figure out how many of the other node types there are, particularly full nodes. From our perspective, the decentralization of a cryptocurrency blockchain fundamentally depends on how many full nodes there are, because they store the full transaction history. If there are only a handful of full nodes on Celestia, then, well, it's arguably quite centralized, regardless of the number of other nodes. For what it's worth, Celestia is likely more decentralized than most cryptocurrencies out there, and the fact that it's based on Cosmos means that it's fast and user-friendly. FYI, Cosmos-based blockchains can apparently process up to 10,000 transactions per second, although Celestia's TPS is unclear. This is once again thanks to the fact that Cosmos-based blockchains are somewhat centralized due to their relatively low validator count. And, for anyone wondering, Celestia's staking rewards are currently around 16% per year for validators and delegators, with no minimum stake and a 21-day unlock for both. Note that slashing is enabled, so do keep that in mind if you stake or are planning on staking TIA. All of which nicely ties into TIA's tokenomics. TIA is the native cryptocurrency coin of the Celestia blockchain. It's used for staking and to pay for transaction fees. TIA is apparently also used for governance, but it's not clear how this governance is done. Celestia doesn't have a governance dashboard at the time of shooting this video. Regardless, TIA had an initial supply of 1 billion, which was allocated as follows: 35% to investors, 17% to the team, 26% to the foundation, and 20% to the public, 7% of which was allocated to the airdrop. According to ICO Analytics, the ICO price for TIA was $2.30, likely in the second ICO of 2022. The vesting schedule for these TIA coins can be seen here. As you can see, this vesting will last for 4 years, with a massive vesting cliff coming after the first year, which is this October. It looks like TIA's supply will double in about a year's time, and that's just from vesting. As with most Cosmos-based cryptos, TIA also has a fairly high inflation rate of 8%. The difference is that TIA's inflation rate will decline by 10% per year until it hits 1.5%, which is scheduled to occur in roughly 15 years' time. This paints a supply-side picture for TIA that could suppress its price. But, as all of you will know, TIA's charts tell a different story. It's been hitting all-time highs ever since it launched last October, and even held up quite well during the recent correction. This presumably means that the demand side of the equation is even stronger. Now, for the time being, the biggest demand driver appears to be pure speculation, both price and airdrop. That's because the Selenium Explorer notes that there have been almost 200,000 TIAs worth of fees on Celestia. Assuming an average price of $15 per TIA, that only works out to around $3 million. Not that much. Meanwhile, the Accounts tab of the MintScan Explorer notes that the number of Celestia wallets has increased by a staggering 300,000 over the last 30 days, with over 750,000 accounts and counting. This suggests that lots of people are rushing in to buy and hold and stake TIA. This is likely because of future airdrops that could come for projects building on Celestia. So, this naturally begs the question of how high TIA could go, given that its primary demand driver is speculation and airdrop hunting. Well, the answer seems to be higher than you think. As far as we can tell, it looks like many people see Celestia as a new kind of Ethereum killer, and it's telling that Mustafa seems to have dodged questions about this. What's even more telling is how the rest of the crypto industry has responded to Celestia's launch. Shortly before Celestia launched, Arbitrum announced that its Orbit chains would leverage Celestia for data availability. As most of you will know, Arbitrum is currently the largest Layer 2 on Ethereum. Shortly after Celestia launched, Avail, formerly a part of Polygon, the biggest Ethereum sidechain, announced that it would be launching its own data availability layer to compete with Celestia. And Near Protocol subsequently announced that it would seek to provide data availability solutions like Celestia. 1 month after that, Polygon announced that it would offer Celestia's data availability solution to Layer 2 developers, something surprising when you consider that Avail was part of Polygon. All the while, Vitalik has been making statements which give the impression that he's nervous about Celestia. For example, Vitalik recently stated that Layer 2s leveraging Celestia are not genuine Layer 2s, but so-called validium chains, which are likewise outside the scope of this video. Not only that, but Vitalik underscored the fact that using a different chain for data availability undermines security guarantees. So, taken together, these facts suggest that Celestia has serious potential to disrupt the broader crypto ecosystem and possibly even Ethereum itself. Then again, it's possible that the data availability selling point will become less powerful or even irrelevant once Ethereum's Denkun upgrade has launched. You can learn more about that using the link in the description, by the way. But back to TIA's potential. Now, TIA's biggest hurdle is going to be its market cap, which is already around $2.5 billion. When that vesting cliff comes in the autumn, it's likely that TIA's market cap will surpass $5 billion. As TIA's market cap grows, it will become harder to push up its price. The caveat in this case is that Celestia is a brand new cryptocurrency with an innovative technology that could truly shake up the crypto ecosystem. The speculation around this fact alone could be enough to pump TIA by up to 10x, even with a much larger market cap. If you want to try trading what is likely to be an explosive move, then check out the Coin Bureau deals page, by the way. It's got trading fee discounts of up to 60% and sign-up bonuses of up to $50,000 on the best crypto exchanges. These deals are exclusive to Coin Bureau and are available for a limited time only, so check them out ASAP. The link will be in the description. Now, whether TIA can pull a 10x ultimately depends on Celestia's upcoming milestones. Unfortunately, Celestia doesn't seem to have a roadmap, nor could we find any concrete milestones listed anywhere. Fortunately, though, this is probably why TIA was able to list on US exchanges. The SEC doesn't like roadmaps. So, instead of a roadmap, Celestia has Celestia Improvement Proposals, or CIPs, SIPs, which are analogous to Bitcoin's BIPs, Bitcoin Improvement Proposals, or BIPs. As with Bitcoin's BIPs, Celestia's SIPs can be found on GitHub. Naturally, almost all of these SIPs are technical in nature. One of the only SIPs that isn't technical in nature relates to on-chain governance, which you'll recall is apparently possible, but can only be done by coding, at least according to Celestia's documentation. The discussion about this SIP in Celestia's forum seems to suggest that it's currently on hold due to TIA's supply. This makes us wonder whether Celestia is waiting for early investors' coins to start vesting before they introduce on-chain governance. Anyways, the discussion also reveals how governance on Celestia currently seems to work. Quote, "Governance still happens in Celestia Core Devs Call, which is off-chain for any parameters that impact the core protocol, and that includes on-chain governance parameters. Submitting an on-chain governance proposal after that to modify the value of the param can happen after rough consensus is reached." Now, besides governance, there is one milestone that Celestia seems to implicitly have. It's one referred to earlier, and one that Celestia wrote a blog post about in July 2022. It's the idea that rollups, aka Layer 2s, will become their own sovereign chains that leverage Celestia for consensus and data availability. Notably, the blog post highlights the fact that Layer 2s on blockchains like Ethereum are, in a sense, dependent on the Layer 1 they're connected to. As I'm sure all of you will know, moving assets between Ethereum and its Layer 2s requires bridging. Therein lies the technical dependency. By contrast, Layer 2s on Celestia can be truly sovereign, that is, independent. That's because there is no bridge. The Layer 2s are just dumping their raw data into Celestia's blocks and using its consensus for additional security. Assets of Celestia's Layer 2s exist natively and only on the Layer 2s. And if you're wondering why these Layer 2s don't just use Ethereum for data availability instead, the blog post has the answer. Quote, "This adds more overhead compared to using a pure data availability layer such as Celestia, because the rollup nodes need to take an interest in the validity of all the transactions in the Ethereum settlement layer, in order to run a node for the Ethereum data availability layer. In other words, Ethereum is a more expensive option for data availability, and Celestia is cheaper. As you learned though, Celestia also appears to be much more centralized, and Ethereum offers better security guarantees due to its size. Remember that Denkun's data blobs will make Layer 2s cheaper and faster as well. This brings me to the challenges we foresee for Celestia. The first challenge is adoption. Celestia's main selling point is that its modular blockchain makes it easy for anyone to spin up their own execution layer and leverage Celestia's consensus and data availability. And there's no question that many Layer 2s will do this. However, there are questions about trade-offs. As I mentioned a few moments ago, leveraging other monolithic blockchains like Ethereum may be more costly, but the trade-off is more security. Some monolithic blockchains like Solana are also already cheap and fast, so why not use them instead? The bigger question, though, is why new crypto projects shouldn't launch their own application-specific Cosmos-based blockchains. For those unfamiliar, application-specific blockchains are what the Cosmos ecosystem is all about. Similarly, Celestia is trying to create an ecosystem of sovereign, application-specific Layer 2s. Again, Celestia's selling point is that it can make it easy for anyone to spin up their own execution layer without having to bootstrap validators for consensus and data availability. There's a bit of a paradox here, though, because crypto projects who can't do this bootstrapping presumably don't have much value. Put differently, Celestia's selling point could be the most attractive to low-value crypto projects, its impressive partnerships notwithstanding. It's also likely that crypto projects which start off as Celestia Layer 2s and become successful will spin off and launch their own standalone chains, just like DYDX did. This relates to the second challenge we foresee for Celestia, and that's competition. Celestia may be the first modular blockchain, but it sounds like it won't be the last. It's likely that we'll see many more modular blockchains come along, some of whom could be objectively superior to Celestia. And this competition could even come from changes made to the monolithic blockchains themselves. I don't want to flog a dead horse here, folks, but Ethereum's Denkun upgrade could very well make Celestia less attractive to Layer 2s. That's just because it will introduce a de facto data availability layer to the Ethereum blockchain. If Celestia is a threat to Ethereum and other monolithic blockchains, which seems to be the case, then you can bet that we'll see those monolithic blockchains make more changes that make Celestia less appealing. Conversely, though, it's possible that Celestia will continue to innovate in a manner that monolithic architectures can't. And this pertains to the third challenge we foresee for Celestia, and that's centralization. If you were paying close attention during the technology part of this review, you'll know that the Celestia blockchain has multiple node types, and the only node count we were able to find was for its validators. To Celestia's credit, it doesn't pretend to be decentralized like most other Layer 1s. Case in point, its homepage makes no mention of decentralization, and there are only a few mentions of decentralization in its documentation. Last we checked, though, cryptocurrencies are supposed to be decentralized. This is something that's been completely forgotten by many in the crypto industry, and it seems that the next generation of cryptocurrencies is always more centralized than the previous one. This seems to be a symptom of a much larger problem, a race to the bottom in terms of speed and cost. What lies at the bottom is a version of the existing financial system that's even worse than the one we have now. What lies between where we are now and that bottom is regulatory scrutiny and the risk of regulatory capture, something that Celestia could fall prey to if its blockchain is as centralized as it seems to be. This, in turn, creates a massive risk for any Layer 2s that decide to integrate with Celestia for the faster speeds and lower costs it provides. Thankfully, though, this is something that Mustafa is hyper-aware of. And, as we know, he has a history of undermining the powers that be, which suggests that he won't let this happen to Celestia. So, in sum then, Celestia is a new kind of cryptocurrency that could have incredible potential. Its modular blockchain architecture has taken the crypto ecosystem by storm and could shake it up big time. But for now, this is mostly speculation. Speculation which has been the primary cause of TIA's impressive price action. Assuming that Celestia can achieve adoption by onboarding quality crypto projects, continue to outpace monolithic cryptocurrencies through innovation, and embrace enough decentralization in the process, then TIA could easily be one of the most promising large-cap cryptocurrencies of this upcoming cycle. That said, the coins and tokens with the biggest potential will be all the new cryptos that pop up in Celestia's ecosystem, as well as all the new modular blockchains that are likely to launch. And if you want to see us review those when they come around, then become a member of the Coin Bureau Club. The link will be down in the description. And that's all for today's video, my friends. So if you learned something new, let us know by smashing that like button. If you want to keep learning, subscribe to the channel and ping that notification bell. If you want to help others learn about Celestia, then take a second to share this video with them. Spread the love. They'll thank you for it, I'm sure. Remember that the Coin Bureau Deals page has trading fee discounts of up to 60% and sign-up bonuses of up to $50,000 on the best crypto exchanges. If you're thinking of trading TIA, maximize your profits by taking advantage of those deals. The link to that page is in the description. Thank you all so much for watching, and I'll see you in the next one. This is Guy, signing off.